All right, welcome to this explainer. Today we're going to objectively decode the historic SpaceX IPO to find out what is actually driving this monumental financial event. I'm super excited to guide you through the numbers, the overarching narrative, and honestly, the really intense debates surrounding this massive market debut. So let's just dive right in and separate the hype from the hard data.
$1.77 trillion. Let that sink in for a second. That was the staggering initial valuation of SpaceX when it hit the public markets. It instantly made the company larger than many established tech giants, and, well, it briefly crowned Elon Musk as the world's first trillionaire. But look, a number this massive demands some serious scrutiny. We have to ask ourselves, is the biggest IPO in history actually worth the price tag? Or is the market just paying a huge premium for a future that hasn't even been built yet?
To answer that, we're going to systematically dissect this whole thing. First, we'll look at the trillion-dollar liftoff itself, then go inside the spaceship to view their three business pillars, explore the illusion of control with their dual-class stock, weigh the bulls versus the bears in the valuation debate, and finally, look at earnings and market reality.
Okay, Section 1. The trillion-dollar liftoff, anatomy of a historic IPO.
Taking place on June 12, 2026, the sheer gravity of this offering completely reshaped the market landscape. I mean, SpaceX didn't just go public, they hit the NASDAQ with a mind-blowing $86 billion raise. To put that into perspective, that totally dwarfs previous historic IPOs like Saudi Aramco. The momentum was so intense that SpaceX actually managed to secure a really rare rule change from the NASDAQ. This allowed them to bypass the usual waiting period for early inclusion in the prestigious NASDAQ 100 index. This essentially forced index funds to buy the stock immediately, creating an instant, massive bedrock of demand.
Now, what's really fascinating here is the unusually high 30% allocation that was specifically set aside for retail investors. Normally, an IPO of this magnitude reserves, around 90% of its shares for large institutional money managers, the big hedge funds and mutual funds. But by reserving nearly a third of the 555.5 million Class A shares for everyday investors at $135 a pop, SpaceX essentially welcomed the public into a traditionally institution-dominated arena. It was a massive populist move, for sure, but as you'll see in a minute, buying a piece of this company comes with some major caveats.
Moving right along to Section 2. Inside the spaceship, the three pillars of SpaceX.
To even begin to justify a nearly $2 trillion price tag, we have to look past just the rockets and examine the company's extreme vertical integration. It's like a giant puzzle. The business relies on three interconnected pillars. First, there's the space segment, handling the physical launches and the Starship program. Second is connectivity, which is driven by the Starlink satellite internet constellation. And third is AI, represented by their recently acquired subsidiary xAI, which is building massive artificial intelligence infrastructure. The synergistic idea here is pretty brilliant. The rockets launch the satellites transmit the data, and the data feeds the AI. But, well, the financials tell a very specific story. The crucial takeaway from their Q2 numbers is that connectivity, meaning Starlink, is literally the financial engine of the whole operation. It brought in over $4.2 billion in revenue and a very healthy $1.65 billion in profit. However, those gains are currently just subsidizing massive capital expenditures and heavy losses in the other two segments. The space division lost over $500 million, largely due to intense R&D for Starship. And meanwhile, the AI segment? It lost a staggering $1.25 billion as they rushed to build out these massive data centers.
Let's jump into Section 3, the illusion of control, understanding the dual-class stock. You see, owning a share of SpaceX absolutely does not mean you have a say in its future. Like a lot of modern tech megacorps, SpaceX uses a dual-class stock structure. The public bought Class A shares during the IPO, trading under the ticker SPX. These give you full economic rights, but they only carry one vote per share. Meanwhile, the pre-IPO insiders hold Class B shares. These are not publicly traded, and they carry a massive 10 votes per share. This structure is totally intentional, guys. It means public buyers get the economic upside, and the downside, of course, of the company's performance, but practically zero voting power in the boardroom.
The reality of this structure is actually pretty stark. Elon Musk alone controls over 82% of the total voting power through his Class B shares. And when you add in the other founders and executives, insiders control over 91% of the votes. Meanwhile, that massive $86 billion public float we talked about earlier, economically, it represents just about 4.3% of the post-money equity, but structurally, it holds less than 1% of the voting power.
Bottom line, when you invest in SpaceX, you are placing absolute trust in Musk's leadership and vision, completely without the ability to challenge it.
Which brings us to Section 4, the valuation debate, bulls versus bears. So, is SpaceX genuinely worth $1.77 trillion? Wall Street is sharply divided on this. Let's start with the bull case, which was driven heavily by the IPO's underwriters. Supporters argue the valuation is completely justified by a historic total addressable market, or TAM, projected at $28.5 trillion. They aren't valuing this as a space company, they are valuing it as an AI infrastructure monopoly. And the proof, bulls argue, is in the massive, tangible AI compute contracts SpaceX has already signed. We're talking a $1.25 billion per month deal with Anthropic and a $920 million per month contract with Google. To the supporters, these numbers prove SpaceX is successfully commercializing the world's most powerful AI supercomputers. But independent analysts countered this optimism pretty sharply. Take Aswath Damodaran, often called the dean of valuation on Wall Street. He looked closely at the numbers and literally called the company's ability to capture that massive AI market share beyond plausible. His own models place the company's value much closer to $1.3 trillion. Bearish analysts are quick to point out that XAI is currently bleeding cash and betting that a single company can capture the vast majority of a highly speculative, multi-trillion-dollar future market. That is incredibly risky.
And some go even further than that. Famed short seller Jim Shinos points out that simply providing GPU compute power to third parties like Google and Anthropic is at its core just a commodity business. You're essentially just renting out server space. Historically, hardware and commodity computing businesses are valued far lower on the public markets than, say, software companies with high margins. Critics argue that the underwriters have essentially priced SpaceX for absolute perfection, relying on the public's blind confidence in Elon Musk rather than conventional financial metrics.
All right, Section 5, earnings and market reality, the post-IPO turbulence.
So what actually happens when all this hype meets the quarterly earnings sheet? Well, in early August, SpaceX released its first public earnings report, and from a pure growth perspective, they absolutely crushed it. Wall Street was expecting about $6.93 billion in revenue, but SpaceX blew right past those expectations, delivering $7.81 billion. That represents a staggering 92% year-over-year growth across its segments, plus they significantly narrowed their net losses compared to the previous year. On paper, the underlying machine of the company appears to be working incredibly well.
But here is where the harsh market reality sets in. Despite the massive earnings beat, the stock has actually plummeted about 24% from its post-IPO peak, dropping well below its initial $135 offering price. Why? Because the broader market is incredibly wary of the massive capital expenditures required to keep this kind of growth going. And there is a major, major test looming on the horizon. On December 9, 2026, the IPO lockup period expires. This means over 900 million shares held by early investors will suddenly be eligible to trade on the open market. That could flood the market with supply and put even more downward pressure on the stock price.
Which leaves us with the ultimate question. As you sit back and consider the data in this explainer, the dual-class structure, the intense valuation debate, the upcoming lockup expiry, you really have to ask yourself, when you look at SpaceX, are you investing in current fundamentals and reliable cash flow? Or are you paying a massive premium for a visionary future that is still light years away?